Hey there! In this video, I'll share the most effective scalping strategy from my channel with the potential to earn you some serious profits in a short time. I'll backtest it at 100 times on the gold chart using a 5-minute time frame to prove just how powerful it is. I'll be using TradeGenius for backtesting, which is known for being both fast and easy to use. With TradeGenius, you can save backtesting results and access detailed data like profit factor, average winning and losing trades, and an edge score to evaluate your backtesting performance. To give TradeGenius a try, just follow the link in the video description below. If you sign up now, you'll unlock a fantastic bundle of bonuses worth almost $900. This includes the full step-by-step backtesting plan 2, a complete course on creating profitable mechanical trading strategies, and 4 professionally designed high-quality strategies. Don't miss out on this exclusive chance to level up your trading game and gain access to a wealth of resources to boost your success. Alright, let's get started with this strategy. Please add the EMA TransBar Indicator to your chart. You'll find it in the indicator section of TradingView website. But it's not just about adding the indicator, right? You'll get to fine-tune it, adjust it to fit your trading style and the market you're in. Now, here where it gets interesting. You see the price candles on your chart? Their color and position related to the moving average line can tell you a lot about the market momentum. Imagine you see green candles sitting above a green moving average line. That's like a green light telling you the market is revving up with an upward momentum and prices are on an upward trend. But what if you see red candles huddled below a red moving average line? That's the market hinting at a bearish or downward momentum. Hold on a second. You're not quite ready to start trading with this strategy just yet. The next step in our strategy involves the integration of an indicator known as the least square moving average or LSMA. Alright, you've added the LSMA to your chart, but it's not about just adding and forgetting. You've got to tune it, adjust it, and make it work for your strategy and the market you're in. Now we're ready to start trading. We have 2 simple rules to follow. For a sell trade, we first need to make sure the market trend is downward. Then we wait for a red candle to break out below the LSMA line and close under it. With both of these conditions met simultaneously, you're all set to enter a sell trade. Next, to manage risk and capital, set your stop loss slightly above the recent swing highs. And finally, the best step for exiting a profitable trade is to use a risk-reward ratio of 1 to 1.5. And when you're eyeing a long trade, the first thing you want to see is an upward market trend. It's like the market laying out a green carpet for you, inviting you to a step in. Then you're on the lookout for a green candle, making a bold move, breaking out above the LSMA line and closing above it. Once you've seen these two signals lining up, you're ready to make a move and enter a long trade. But remember, trading is not just about making the right move. It's about protecting yourself. That's where your stop loss comes in. Set it just a tad below the recent swing low. And when it's time to take your profits and exit the trade, a risk-reward ratio of 1 to 1.5 is a good rule of thumb. So imagine you've got this trading strategy. How well is this going to work? That's where backtesting comes in. It's like a time machine for traders. You're testing your strategy on historical data to see how it would have performed. We took this strategy for a spin on a gold chart with a 15-minute time frame. And guess what? Our strategy scored a win rate of 60%. That's like winning 6 out of every 10 trades. And these wins weren't just a small change. They added it up to a profit of 162%. It's like turning $1,000 investment into $1,625. But it's not just about the winnings. Our strategy had a profit factor of 2.5. That means the total profit from winning trades was 2.5 times the total losses from the losing trades. It's like for every dollar we lost, we made $2.5. And here's something interesting. During the backtest, we had a winning streak of 5 trades and a losing streak of 3 trades. It's a reminder that wins and losses often comes in streaks. And it's important to manage your risk and capital accordingly.